Okay. Hey, folks, is it true that 90% of new traders really lose 90% of their money in just 90 days? Well, we're going to be sharing some things with you today that'll help you beat those probabilities. But first, before we jump into that, let's take a look at what's going on with the indexes. As we see from the indexes, I'm going to jump over here and just take a real quick look at the Russell. The Russell has been the redheaded stepchild for almost 2.5 to IWM. Yeah, there we go. For a couple of years now. But are we finally working our way out of the malaise? And will the job report today that was really weak encourage the Fed to basically drop the interest rates and then continue to propel the small caps to back up to their highs, their past highs. Remember, I'm going to show you basically a monthly chart over here because we are at the beginning of the month. And as you note, this was the past high up here about the 211, 213 place. Almost made it up to the high last month. And then we sold off for much of the month of April. However, it looks like we're getting a nice little rally going into the first part of May. And we're continuing to push higher. Note, I like using the 8-period moving average because it is a really great line of demarcation on all time frames. Notice the price action this month has come down to the 8-month moving average and is rebounding from there. What about on the weekly chart? Let's work our way to the right. Similar type situation. We're getting potentially get a close today above the 8-week moving average, which is oftentimes a prerequisite to a move higher. This next move up, depending on what happens with the Fed, could drive us into a lot of different directions. And so I'm really excited about this. And on the daily charts, though, we had a little bit of a consolidation, as you see here. And then we basically, after the Fed reported out on this day, we have broken out. I have a runaway gap here that could provide us the power to move on up back into these past highs. I would look at it to be one of those kind of moves where you zigzag from higher lows to higher highs to higher lows to higher highs until it finally gets up here. That's what I'm looking at for the next test of the Russell will be once it gets up here. Now, of course, it could throw us a total curveball and break down with any bad news, whatever. So I'm looking at the indexes right now, Anil, as being, and we'll get into the other index ETFs that we watch here shortly. But first, we need to switch back over. There we go. But first, let's take a look at our topic for today. And so it is true that 90% of new traders will lose 90% of their capital within the first 90 days. This sounds daunting, right? But what if I told you that understanding how this rule came about will help you break it so it doesn't apply to you? And so, Anil, welcome. And what are your thoughts? Well, one, I'm thrilled that you're here. Anil and I had a chance to talk about his triple screen system a little bit earlier this week, and he gave a great presentation for the Bay Area moneymakers. And so And and Anil has been instrumental in refining strategies on to counter common trading pitfalls and mistakes. So as we dig into the startling statistics of 90% of traders losing money, we'll face the fact. Is it the fact or is it a myth? And so, Anil, what's your thoughts?
No, thank you. Thank you. Glad to be here. And my research has shown about the same thing, and I'm still digging into it. But yes, 90% of the traders do lose money. And
Wow.
what you are saying is additional that they lose within 90 days.
Well, I didn't, and
That,
I didn't realize that before I started digging into it. But go ahead. Go ahead.
so that is scary. But like you said, there are reasons for it, and all my studies are indicated that the importance of strategy is 20%,
Yes.
and the 80% is the mindset and the psychology.
Okay.
And I'm digging more into what parts of the mindset, what part of the psychology, and how can we figure it out and simplify and help people. So I'm great you're digging into that.
That's awesome. Yeah, because like I said, when I started looking at this, and the deeper I dug, I was going, "This is absolutely amazing." But it answered a lot of questions from my own trading experience back when I first got started. I'm going, "Yeah, okay, now it kind of makes sense." Because believe it or not, some of these things that cause the 90% rule, or the rule of 90 is what they call it, that cause it, are things that could be avoided with just a little bit of previous knowledge. And that's what we're here today to help people out. Because, it's not just a myth, it is a harsh reality of trading. But first, let's take a look at, hey, taking a test flight with the AutoPilot trading system. It's a great service and mentoring service, and so I encourage you to check it out. It's a value about $1,700 per month, but you can test drive it for approximately $95 per month to get go for 3 months and see how. And you do want to do it before the increase, and there'll be a link down in the description. Now back to what else we were doing. Hold on a second. So wherever you're joining us from, please drop a note. We've got Hal joining us, Wayne from Houston, Texas. Hal, good to see you on board. And just drop a note in there to let us know where you're joining us from in the comment section. Of course, O'Neill is joining us from Delaware. So we already covered the Russell. So let's go ahead and jump in and look at what's going on with the other stocks. And so let's start with the Spider. And with the weak jobs report this week, what we're getting is, it appears as if, I don't know if we'll have the volume or not, Anil, but it appears like we may be getting a follow-through day to the rally attempt that the IBD always talks about. I know now that we've broken out, and here's what we're seeing with the S&P. Notice we had a swing up, and then a drop from the moving averages down. This was the first higher swing low. We came up, made a new swing high, came back down, made a new swing low. And this was really, and I want to highlight it to folks, this was really an excellent looking pattern, in that on Wednesday, the day of the Fed, we get an inverted hammer, which is a bullish reversal signal. Then yesterday, we get a really nice hammer right up into the 8-day moving average. And now we're getting a follow-through move with a big gap up this morning due to the poor jobs report. Look for us to continue to press higher. However, I'm looking for this to also zigzag its way up, at least back up into the approximately up into the past highs. And then as you see, we've got a trend line up above that on the weekly chart. We'll see if we challenge that trend line there. That will work as a level of resistance on the S&P. On the next one, we'll basically take a look at the, here's what I'm looking for. Hold on the NASDAQ. NASDAQ also a similar type formation and pattern that we see with the S&P. Price actions have now broken back above the 50-day moving average after a similar type pattern of a inverted hammer followed by a hammer closing slightly above the 8-day moving average, a gap up. Now we have to remember on the way back down, folks, if we did a testing on that, we may get the testing coming down into this gap right here. Let me draw that in. That gap right there. That should constitute a strong level of support, and it also contains the 50-day moving average. And so what that may mean, we may drive up a little higher and then come back and test the 50. That would be fine, and then rally. A matter of fact, one of the things to look out for is if we get all the way up here, run all the way up to this downtrend line here, that's where we may stall, and we'll wait for a pullback to build momentum so then it can bust through that and go back up to this year's highs. Now, those were all-time highs on the NASDAQ as represented here by the Qs. So what I'm seeing, Anil, is just the indexes are look to be like they are jumping back in gear. The only other downside that I see is this nice rally is being made on lower volume. So that is a concern. But also we're going into the spring or the summer months. So sometimes those lower volumes during the summer month is a reality. So what's your triple screen telling you about the indexes?
Triple screen, interestingly, the weekly triple screen buy signal has not been broken yet.
Okay.
The daily, of course, was broken and looks like it's turning around. And since today, actually, MACD and RSI has definitely reversed, gone into the positive territory, but waiting for the EMA 8 and EMA 20 to cross.
Okay. And
that's about true for all the indices.
I agree. But it is a good sign, I think, to have the price action, especially on the NASDAQ, back above the moving averages.
Yep.
So that's excellent. So, excuse me. So, hey, are you puzzled by what's holding you back from reaching your trading objectives? You're not alone. Coming up, Anil and I are going to be tackling our topic for today about the rule of 90. So get ready for some really good breakthroughs. I want to share with you really quick. We talked about that. And just here's what we're doing. This was our P&L from last year. And then here's what we're looking for. We had a really nice pickup for the month of May. Actually, so funny. I finished off, I think, last week. I was almost flat the market with no positions whatsoever. And with the pullback that happened after the Fed, we actually filled out on almost all our positions. And so we're getting a nice reversal today to the upside. And the profits we're back in line, heading the right direction, paralleling my 40% line, but a little bit behind schedule. And that's fine. We'll just, we wait for that to take place through the year. And so here's what we finished up. This was about 9 o'clock this morning, up about 11%. And one thing to note, the Russell also turned positive on the yearly. And it's still below its all-time highs though over here. So let's go ahead and Neil, and let's jump into, there we go, our question for today. So first of all, what is the rule of 90 and why does it even matter? And that's a question for both of us to answer.
Rule of 90, why it matters is, I think it's kind of a shattering blow to somebody trying to get started. And it says if you have not done your proper homework, destroys your ego. So
Yeah, it can. Yeah. It can lead a person to, I think, a lot of strong frustrations. And we're going to take a look at some of the other factors that go into it. And I think one of the things is the rule of 90. I think majority of traders, I think it's human nature to think, well, yeah, but that doesn't apply to me. I mean, I know I've made decisions in my lifetime that were bad decisions, but I justified them by saying, yeah, but that doesn't apply to me. I'm too good for that, or I'm too bright for that, and all that kind of stuff. The second question that we'll take a look at here is, how do emotional factors like FOMO or overconfidence affect new traders in a negative way? Anil?
the overconfidence on it, I did some research on it. The most people who fail in this thing easily are the, believe it or not, people who have engineering mind. They think they got it all figured out. There is a cause and effect relationship on everything.
Yeah.
And when they enter the stock market, that thing kind of evaporates because of the emotional and psychological impacts that's driven by this mass. Stock market is driven by mass psychology, and if you don't pay attention to that, it can get you. That's what.
Yeah, I agree with that. Is the aspect of that overconfidence, and I am an engineer, and so I can talk bad about engineers, but engineers have a tendency to try to fix things or improve things or reinvent the wheel when the wheel doesn't need to be reinvented. And that's especially true for trading. And Paul mentions back here, yeah, +1 on psychological factors. And George says, where does market sentiment to you both collide with technical analysis? We'll chat. We'll talk about that shortly. But yeah, I think that one of the things that I when I was first starting to learn how to trade is the aspect of what goes on with emotions. And I didn't even realize that I had some deep-seated emotions about money that impacted my decision making in trading, therefore making me, suspect or susceptible to making impulsive, compulsive, and all that kind of type of trades. And then on the aspect of overconfidence, and I think you hit on it, oftentimes people who have been really, really successful in other areas of life, career-wise, relationship-wise, they come into trading thinking, how hard could it be? I've been successful in A, B, C, D, And so of course, I'm going to be successful here. And let me share something with everybody just really quick. Okay, I used to fly jets off of aircraft carriers, right? Learning how to trade and controlling my emotions has been more difficult than learning how to fly jets off an aircraft carrier. And basically, and take that to the bank. The next question is, can following the herd be detrimental to your trading success? And what the heck is following the herd mean anyway? Go ahead.
Following the herd is where the market is moving, and some of the detriment comes is if the market is really moving up.
Yeah.
And sometimes you don't, and I talked about it, I think, a couple of weeks ago, is the recency bias that comes in. If the market was going down and, oh, it's going up, it can't be true. And then all of a sudden you find out it's really true.
Mm-hmm.
And you try to get in, and then it takes a temporary dive the other way, and it shatters your ego.
Yeah. Yeah.
And those kind of things are going on. So following the herd could be okay if you have a sound system that giving you proper indication of what's really happening.
Yes, I agree with that. And so, yeah, social media these days, you go over to Twitter, you go over to or X, you go over to Instagram and all kind of stuff. There's always somebody over there. It's the Lamborghini guy. I call him the Lamborghini guy. He's over there talking about, I just made 1,000% on such and such a trade, but he doesn't talk about his system. And that was just one trade. His body of work is questionable and suspect. And I don't care how many snazzy, pictures you take of a Lamborghini or whatever, it doesn't make you a great trader. And so following the herd can be detrimental. It reminds me of you're probably familiar with the experiment that was done by, I think it was a French scientist with processional caterpillars. He put the processional caterpillars along the rim of a flower pot. And he kept putting them on there. And the processional caterpillars, what they do is they follow each other. They basically go follow each other. And he got enough on the rim so that it was totally filled with processional caterpillars. And in the middle of the flower pot was their favorite food. Their habits were so strong to follow the leader that they just kept going around in a circle, around in a circle, around in a circle until they all got tired and are hungry, and they finally either died from exhaustion or died for hunger. So I tell you that story to just share with everybody. Sometimes it's okay to get out of line and take a look to make sure you're going in the right direction. So what steps can new traders take to avoid common pitfalls regarding the rule of 90? Anil?
I think my new revelation, relatively new, I would say, is to have focus on the process and in your face performance review.
Mm-hmm.
And there I come back to Mark Minervini and talks about expectancy and the batting average and risk reward ratio.
Right.
And you got to have it all the time, and you got to know where you are.
Yep.
That's someone going to tell you process wise where you are, and if you need to make some improvement, you can start making is what you measure gets improved.
I agree wholeheartedly. And we were, both you and I sat under Charles and Deming for classes back in the day.
Yep.
And that's one of the things that I took away from him. Part of my input on this is just the recognition that you need a plan. And if anybody comes to me and says, hey, I want to start trading, they're all excited, all that kind of stuff. I basically give them 2 books. I don't give it to them. I let them buy them and use my Amazon affiliate number. No, what I do is I promote. I basically say, read my book, Trade Your Way to Freedom, and then also I say, read Bill O'Neill's book, How to Make Money in Stocks. When you finish those books, come back and see me. We can talk. At least that gets them started, and I think increases the probability that they will not wind up in the 90% club, because they'll know they need a plan. And then recognize there's 3 words that you need for your vocabulary. One of them is discipline. The next one is will. And the third one is just, the dedication to stick with it through to the end. So what can we do, Anil, to shift the new trader from being statistically more likely to fail and bring them into the 10% that are going to be successful? Just your thoughts in a couple of thoughts.
I think somewhere in our education system, we need to, and I'm talking about traders' education, emphasize the psychological parts and let the trader be aware that that is a huge impact on that thing.
Yes.
When I went into that, started that, I did not know that. I thought, oh, I was a super engineer and I can do design of experiments and do this and do that and I'll be okay. Not true.
That's excellent. And so, yeah, and I agree with that wholeheartedly, with the aspect of one of the other things that I think that would help is encourage them to have a plan. But when you're discussing with a fledgling trader, is help them understand that many of the reasons, you called them psychological, but many of the reasons people wind up in the 90% club is because many of the basic beliefs and emotions that drive those decisions are subconscious. They don't even know that what's causing them to make the decisions the way they're making them. So anyway, good topic, Anil.
Thank you.
Yeah, great. Excellent. So let's see, George asked a question, where does market sentiment to you both collide with technical analysis? And so, Anil, you want to answer that?
Yeah, I was looking at that question, and I think it's a very interesting question. From top of my head, where I'm coming out is, I think technical analysis, if you really pursue it and know it, gives you indications ahead of time, or not ahead of time, right at the time that something is changing, so something is altering. Be aware of that. So good technical analysis can alert right when you need to be alerted.
Yeah. So, and I agree. I really have nothing else to add to that, because I am also of the same belief. And to substantiate that is the stories like, oh gosh, it's my Darvis, who made $2 million in the market, and he was trading via telegraph from overseas. But then there's also the aspect of just shutting down the sentiment. I really don't want to know. I don't care what the sentiment is, because we can, and I've proved that to myself by doing back testing, Anil. Back testing, going back in time, looking at stock charts and that type of thing. And the technicals, I know something happened to cause the price action to do what it's doing, but there's patterns to it. I just have to accept that all patterns are driven by human nature. And so then it's just very simple. I don't know the why behind the crash of 2000, but dadgummit, you could see it on the chart from a mile off before it happened. So good question. Thanks, George, for asking that question. So, hey, let's jump over and take a look at a few of these stocks that we've been looking at. And Neil, we're focusing primarily on, here's the question. If you've ever wondered, I love this. Have you ever wondered if government's intelligence might be a bit more artificial than you thought? Today, we're not just talking about sci-fi, but we're going to be revealing that one of our top stocks is actually turning the joke of government intelligence into a reality by providing AI services to the federal government. So stay tuned until the end, because we're going to basically talk about finding out who's behind making Uncle Sam a little smarter. So we're focusing, as you probably figured out, on AI stocks today. So Nvidia, Anil, I know this has been on your list for some time. Have you bought it already?
I haven't bought it, but it does have a buy signal on a daily chart today.
Okay.
The week chart, as I said, was always on, but it had a sell signal on the daily chart a couple of weeks ago, and now it looks like it's turning around for real. So I'm paying close attention, and I'll probably get back in there with a half a position, and I'm looking for a little bit more confirmation.
Excellent. And NVIDIA just announced this week, that they're doing some work with Microsoft, some integrations to for generative AI with them. Next one up is our buddy Meta. Now, what's going on with Meta? Meta has launched a new open source AI. They want to compete with, it looks like they're trying to compete with maybe ChatGPT. I'm not sure. Now, as you can see by the chart, Meta was taken to the woodshed here earlier in the week, fell with earnings based on their forecast. So
I don't see the charts.
Well, hold on just a second. There you go.
There
now you do.
Yep.
So, and what I'll do is let me run back really quick to NVDA. I agree with what Anil said. NVDA, really nice breakaway gap. And now it's back above all the moving averages. It has a little gap right here. Any type of a pullback towards that gap, I'd look at potentially buying NVDA. Meta is next on the list. And you can see Meta going the other way for one of the Mag 7s. After earnings fell down, it's doing the typical earnings thing. We had a death cross here of the 8-day moving average dropping below the 50-day moving average. Price actions moving back up into the gap down. And so I'd be looking for Meta to potentially stall out prior to getting to the 50-day moving average and fall from there. Next up is, let's see, believe it or not, Microsoft. Microsoft is also coming through with some really great AI things. What do you think about Microsoft, Anil?
Microsoft, let's take a look on that thing. And again, I'll have to wait for the MACD and RSI to go to positive, because it looks like it's turning, but it's below the 50-day line and barely touching, I think, at the 20-day line. So I'll wait a little bit.
Okay. Yeah, I can see that. Mark Nvidia has a really good rule. He basically doesn't buy things if they're below the 50 or below the 200. This in case we're below the 50. Let it prove itself and work its way back out. Next up is our buddy Alphabet. So I have a question for you, a really serious question. Did you prefer Alphabet when it was actually just Google?
I
So,
don't know. To me, it didn't make much of a difference, honestly, based on the charts.
okay. So on Alphabet, well, on Google Alphabet, it's showing, I think, a little bit better performance than especially Meta. It was just rewarded no, it just reached $2 trillion mark in its market cap, and appears to be continuing to grow strongly. So is Google a buy, or is this a buy for you?
Yeah, it had again, the weekly signal has been on, and even the daily has been on. So it's a buy on pullbacks, like the way you do it.
Excellent. Okay. Yeah, I kind of like it. It's really close to where I could take a trade on this. And it is, let me take a peek here. As you can see, from where it's at right now is below this is only about 2%. So on it, you could even carry a 5% trailing stop on it, and it would take you back into the breakout area. So Google looks like it could be a buy almost immediately. And the leverage ETF on NVDA is NVDL. Excellent, excellent opportunity. And then PLTR. Now, Neil, you said that you're familiar with PLTR. Has earnings coming up here on the 6th. So are you a buyer here, or would you be waiting?
No, I'll be waiting for earnings, even though I do have a buy signal today. But with
I
earnings,
know.
was
Yeah, because earnings are Monday. Is it
yeah,
Monday before the market? Yeah, after the market on Monday. So we'll just wait up on that. Some of the news on PLTR or Palantir is that it was just awarded a $100 million U.S. Department of Health contract. And so drum roll, please, because we're going to show you the company that is making the Uncle Sam smarter. And that is, I'm not sure how to pronounce this. I don't know if it's Boz Allen Hamilton or Booz Allen Hamilton. It's one of those two. But this is Ba. Now, I'm not that impressed with the pattern on this, Anil. It's just basically kind of going sideways here. Has earnings coming up on the 24th, and I'm back into a level of past resistance. So, I'm not that excited about it. It has okay, and its volume is okay, just barely meets my requirements of being over 400,000 average volume on 50 days. But my momentum on the daily is out of sync with my momentum over here on the weekly. So yeah, I wouldn't be a buyer of BA right now. What about yourself? Is it booze, BA?
the system is. I have a buy signal since 5 days ago
Right?
on that thing, and on the weekly chart, let me see. Yeah, my God, weekly has been on since about a year ago, and has
Wow.
not gone away. So this is a uptrending stock that's been basing, looks like, and it might come out.
Yeah. I did notice something when I was looking at it earlier, is these moves over here. That move from here, it's a stair stepper.
Yeah,
If you're step, rally, step, these rallies are about 22%. So, from that aspect, yeah, it could be an interesting opportunity. Maybe it has about 15% left in it to the upside before it flattens out and puts in another step.
yep.
So if you have enjoyed today's session, just drop a yes down in the chat box. And also, I think we've answered most of the questions. Wayne and Jake, we got to speak to that. Let's see what else we've got else going on here. George has a question. How do you look at the rally, the daily in contrast to a longer term time frame like the monthly or yearly? Market psychology is always different on these levers, it seems. Yeah, it does, George, to some extent. But again, what I look at when I only look at the monthlies once a month because that's the only time when you get an accurate picture of what the candlesticks are telling you. I primarily use the weeklies and the dailies for my normal trading. I will look at the monthlies. I stay away from the quarterlies and or yearlies per se. Anil, do you look at longer term like a yearly chart, quarterly chart, monthly chart that often?
Now, I look at monthly, and on monthlies, we talked about it. I started looking at the Heikin-Ashi candles on the monthly, and if I get a Heikin-Ashi positive candle, it's a good early indication, and it's
Gotcha.
available on Thinkorswim. So
I gotcha. So, hey guys, as we've learned today, if you're starting your trading journey without a plan and mentor, the odds are against you. That's one of the things that neither Anil and I didn't talk about. But it's so important to have a plan, and you don't have to reinvent the plan. You can always subscribe here to the Market Tech Talk. I put up videos on a regular basis, so I encourage you to subscribe to that. You'll get really good trading tips about. And if you're more serious about it, jump in on the AutoPilot trading. So Anil, another great session. I want to thank you for joining, and thanks for joining us today. It's been absolutely phenomenal. I love getting to chat with you, and I hope everybody else has appreciated this and enjoyed it. So thanks to everybody who's joined us. Until next week, trade smart, stay free, aloha, and God bless. Anil, I have to take one more thing. All materials presented are for training purposes. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance is not an indication or promise of future performance.